We're going to get started. All right, well, continuing on the theme of money and national security, this panel focuses on investing in the security and defense sector. And to moderate the discussion among our panelists this afternoon, we're very pleased to have Noah Shachtman. Noah is a contributing editor at Wired magazine, and he is the editor of its national security blog, Danger Room, which won the 2012 National Magazine Award for reporting in digital media. A non-resident fellow at the Brookings Institution, Noah has written about technology and national security for the New York Times Magazine, the Wall Street Journal, the Washington Post, Foreign Policy, only among others. The offices of the Undersecretary of Defense for Intelligence, the Undersecretary of Defense for Policy, and the Director of National Intelligence have all asked him to contribute to discussions on cybersecurity and emerging threats. Please join me in welcoming Noah and this terrific panel.
Thanks, everybody. So today's panel is on investing in the defense and security sectors. And, you know, for a while, that was probably not the number one hardest job in the world when you had double-digit budget increases at the Pentagon every year, and you had hundreds of thousands of troops deployed overseas, all of who needed goods and services. But now things are a little different, and that means people have to get creative in looking for new opportunities and new ways to invest. And this is important not just to people who are looking to throw their money around, but also if it's not for the people up here on the stage, new innovative companies don't get financed, and new innovative solutions for our troops and intel analysts go unprovided. So we've got sort of an all-star panel here. I'll start out over on the far side. We've got Mike Steed, who's the founder and managing partner of Paladin Capital Group. Tom Sass, who's the director of Platform for HFR Asset Management. He joined the firm after serving 24 years in the SEAL community. Kevin DeSanto is co-founder of Kipps, DeSanto and Company. It's an investment banking firm focusing on defense and technology companies. And Devin Talbott is co-founder and managing partner of Enlightenment Capital, which is a private debt and equity management firm that focuses on aerospace and defense. And before Devin mentions it himself, I'll just go ahead and mention myself. Devin's also the guy that just kicked my ass pretty badly on the morning bike ride. And Devin, I'm going to start with you because you started a fund in investing in the defense sector 7 months ago, just as $500 billion in defense budget cuts are coming, with sequestration, maybe another $500 billion, troops coming home. So my first question is just really basic. Like, are you crazy?
That's a fair question, and it's one, frankly, I get a lot. Our business was started just recently with the explicit thesis, which is very much a contrarian thesis, that now is actually a very interesting time to be investing in the sector. Why is that? Well, one, the sector is out of favor. So a lot of people are getting out of the space. Capital is getting out of the space. And so we think it's a pretty interesting time to be putting money to work there. The defense industry is interesting in that it's a monopsony. There is one...
A what?
A monopsony.
Uh-huh. What's that?
It's sort of the opposite of a monopoly, right? There's one buyer. It's the U.S. government. And so when you're trying to do your customer assessment, you're looking to the U.S. government, and can be a challenging customer. But from our perspective, it's a solid customer to build an investment business around. So there's a few things. Maybe let's take you through a few of the attributes that we think make this an interesting place to invest. One, these businesses tend to have pretty decent barriers to entry. A A lot of the companies we look at are on contracts that limit the competition. There's things like security clearances and technical capabilities that tend to keep people out of the sector, keep it very focused on specialists. These businesses generate a lot of cash. They don't typically require a lot of capital. R&D is often funded, at least partially, by the government. And these are people businesses. So we invest in medium-sized companies, which means our companies are profitable. They're not in the venture stage. They're generating cash. They're often owned by management teams or by private equity firms, and they're sort of at an inflection point. And so we think, with our capital solutions, and we have a number of well-informed advisors who help us look at businesses, that if you bring a creative capital solution, you bring an informed investment thesis, particularly what's going on and with what everyone at the panel has been talking about in terms of how the market is shifting, what's going on in terms of the demand side, what's going on in terms of the threat environment, that it's a pretty interesting time to support businesses that are trying to address those threats.
Tom, with your experience, so long in the military, what do you see as sort of the environment out there? What are the demands that are coming up for the Pentagon? And what are some of the opportunities where new companies can step in?
Thank you. Good afternoon. I come from a different perspective on this, and that is the demand side. Within those 25 years, I certainly spent a lot of time bringing new undersea technology in particular into the forces, a lot of operational prototypes. And so my remarks are really going to be based off that experience, but also on a little more in-depth stuff I finished that I've done over the last 5 years, finishing up a dissertation that specifically looked at DoD, the services, and the environment, and industry in particular. The context really is important to it in terms of figuring out. I'll address you can't direct the demand side unless you discuss the context, which we've talked about here is complex, uncertain. We've talked a lot about resource constraints. But the one thing that I would only contribute to that context that we really haven't talked about is the world's not getting any smaller. So when you think about the demand side, the operational commander that has to do something with forces, he still has the same globe from which he has to balance forces across that space over changing time. That's really kind of important to understand where you find the opportunities. And my thought is the opportunities are really going to come, keeping with the themes of the conference here, the counterterrorism, what the services are doing, what SOCOM's doing, what the intelligence community is doing, what DHS is doing. If the source of the opportunities for the business world is to find out what all those groups, what those tasks that they're actually doing, that they share. What are the same things that they all do, but they do it for a different reason? The reason that supports their foundation, their reason for why the government has created them, their core competencies. And so if you think in those terms, then you find opportunities that drive both scale and scope, economies of scale and scope. And that's where I think today, in a complex, changing environment, is where the business opportunity can be found.
Mm-hmm. Mike, you've been making a lot of deals lately. Where are you investing in? What kind of opportunities are you seeing?
Right, exactly. Paladin Capital Group was founded in 2001, actually before the attacks took place. Immediately following the attacks, General Minahan, Jim Woolsey came and visited with us and said that there had to be an investment community response to the attacks, that we had to focus on critical infrastructure, we had to focus on the vulnerabilities of critical infrastructure, and we had to identify products, services, and technologies coming out of the private sector that could make that critical infrastructure more resilient. We added on to that investment philosophy the concept that alternative energy was a matter of national security. We started investing in this sector in 2002. We've raised about $600 to $700 million that we're still investing in the sector. What we knew during this period of time, when we were looking at critical infrastructure, we were looking at the vulnerabilities and then looking for how to make it resilient, that we had a broad investment philosophy in looking to be able to prevent, defend, cope, and recover with the threats, both the threats from the terrorist community, from natural disasters, and from other kinds of illegal or criminal activity. And so we were looking to the private sector to raise the money. We were looking to the engines of innovations on both coasts and in the middle of the country to find those technologies to make critical infrastructure resilient. It's broad and it's deep, and it has and the structure that we put together back in 2001, 2002 is even more imperative today. What we always thought was that the markets would tell us through a period of 10 years now what were the areas that we needed to focus on. And so today, the areas that we're looking at are alternative energy, but more importantly, cybersecurity. Since 2002, we have invested in 20 cybersecurity companies. We built up a body of knowledge of over 2,000 companies that are out there. And if there isn't a person in this room that doesn't recognize the tremendous threat that cyber has to our critical infrastructure and to our country, then you probably haven't been listening over the last couple of days. And so that's where we're investing now. We're looking at 4 different areas inside of cyber today. We're looking at mobile. We're looking at areas of where the attack surfaces, as General Alexander said, where the attack surfaces have expanded. We're looking at the points of threats. In other words, every single computer in the United States is a point through which the bad guys can come through to get to the critical infrastructure of the United States. So we're looking at education programs to the broader, to the users, if you will, and we're investing heavily in those areas as well. We're looking at the cloud and we're looking at big data. But those would be 4 areas, and I can assure you by the time we come back next year, we'll have another 4 areas that we'll be focusing on. But terribly imperative, terribly important, and we work very closely with not only the government in the United States, but because it's critical infrastructure, it can't just be government. If it's just government, it doesn't work. It's got to be the private sector. And the private sector controls most of the critical infrastructure in the United States. And so if you don't go to the private sector with these products, services, and technologies, along with the government, then you fail to protect the United States. And so there has to be a robust investment program, and we call it dual use, where what we invest in can not only impact the government, but has a dramatic impact on the private sector that controls most of the critical infrastructure.
Got it. So the stuff I heard there was big data, I heard cloud, I heard mobile, I heard education. That to me just sounds like every other tech investing portfolio right now. Maybe, Kevin, you want to take this one? So, what's the difference? Is this just investing in companies? Is there anything unique, really, in investing in the defense space versus, regular technology?
Yes. Devin hit on it a little bit earlier in terms of kind of thinking of it as a market with one customer, which we know is not the fundamental reality. When you look inside of every agency, there's disparate and disconnected and in some ways cooperative and connected parts of organizations. But I mean, this is a massive end market. But the reality is that it's more complicated, it's more archaic. In a lot of ways, there are macro trends that affect it in ways that the commercial market's not affected by, and it's also insulated from some of the trends that we see on the commercial side or kind of in the industry side of things. But I think Mike makes a great point. I mean, these have to be dual use concepts, and one of the things that
so
we've
seen. So in other words, it's not just enough these days to have a cool technology that'll work for the Pentagon or that'll work for an intel agency. It's also got to work for me at home, or it's got to work for me at work.
Yeah, unless it is very program or platform specific, right? I mean, if we're putting something on a Joint Strike Fighter, we don't necessarily need to worry about whether it's going to go into an Airbus or Boeing airplane at the same time. But when we kind of look at this market, the challenge that we have is that the technology is evolving. but the customer's not necessarily evolving. You hear about all these great solutions, all of these great dynamics in terms of the people that have been speaking over the last few days, but the companies themselves have a hard time keeping pace with being able to provide the solutions that are ultimately going to help a lot of these folks that have been up here solve the challenges, solve the problems that they've been faced with. And so, one of the issues is just this disconnect between kind of what companies are out there and what they're doing versus what the customer ultimately wants to do. And then you factor in one of the big kind of differences between this and the commercial market is a very arcane infrastructure that is there to contract with folks that can provide these technologies, and it often is not rapid enough. It's not a market or a group of buyers that have the technology sophistication to keep pace with where the market is. And so you end up with this kind of long, drawn-out process that many folks in the commercial world just don't have the patience for. And that's a big difference between this world and what we see on the commercial side.
One point I would make also is that, there's a lot of focus on this industry on the big guys, right? The Lockheeds, the Raytheons, the General Dynamics. There's 35,000 companies at least that service the Pentagon, and 95% of them are sub $100 million. And so, this is an industry that's ripe with entrepreneurship, small businesses. There's minority-owned businesses, there's women-owned businesses, there's disabled vet-owned businesses. And so there's federal policy to encourage innovation and entrepreneurship. But these companies are also the ones that are more exposed when the markets tighten up and capital dries up. They're more at risk for seeing their businesses stall or disappear.
Yeah, the sequestration concept has come up a bunch, obviously, given where we sit today. The people who are going to pay for that are going to be the 10, 20, $30 million enterprises that don't have the ability to turn on a dime, don't have the ability to deal with the downturns that something like that can have on them, just like that. And that's a big issue. That's one of these challenges that the industry is, I think, overlooking in the way that they're thinking about.
And those are the guys often who are coming up with the most interesting solutions, right? It's the guy who's just left CIA, knows what was missing, knows what he wished he had in his hands when he was in the field, and has started a business.
But there's also an alternate view to that. We also, yes, it's a lot of disparate stuff. There's an arcane process, but we also know that there's a structural change to it. And that structural change in this monopsonistic condition, right? The environment is not only the only customer, but they get to make the rules. And so the rules that Congress made is SOCOM, you're going to be different to be the force that adapts and changes. So SOCOM has, and Admiral McCraven talked a little bit about that at the speech here this week at the beginning, the first thing we had. And he gets to play by different rules. He, up to a certain level, ACAT level 1, which is, I forget whatever the dollar value is, but he doesn't have to go do all that. So those small companies have a mechanism through him, move through it, run operational prototypes that then can be thrown back into industry, having spent time with operational prototypes, that then can either be produced for special operations, peculiar, or shifted across the whole force. So
got it. So there's more flexibility when it comes to selling a SOCOM. Right.
There's more flexibility, and that will endure. It's in legislation. Some of the other things that they've tried to mimic, I forget the exact acronym, but to speed deployment of capabilities to the forces, like the MRAP.
Yeah.
Those were successful, but as that demand draws down, the notion for innovation is going to be found in a lot of small folks, and the other monopsonistic is a big part of the big industries are going to have, they've got these links to Congress, and so that's where the tension lies.
So as you can expect, we're investing in small companies. Those small companies will survive the downturn inside of the Defense Department because the companies that we're investing in have dual use. They have applications to the government, but just as importantly, they have applications to the commercial side. And in looking at the critical infrastructure and realizing that these companies now are going to have to come up with those technologies to protect the critical infrastructure, even more so if you are a company doing business with the Department of Defense and you are delivering material critical infrastructure to the Department of Defense, you're going to have cyber-grade security inside of your systems, or you will not be doing business with the Department of Defense. is where we see this going. And so what used to be in the major companies in the country, discussions at the IT level, it's now discussions in the C-suites because there's a whole regimen coming through. The SEC passes rules that says that your cyber readiness is now a matter of material information that must be disclosed. The FCC now has brought a couple of cases against companies who say that their cyber systems protect the information that you give them. And yet when they're stolen, credit card information stolen, personal information stolen, now the FCC has brought actions. And so you're going to see more and more of this as people realize that the critical infrastructure needs to be protected, and it is on the commercial side that the profits will be made and where the technologies will be adopted.
I had a sort of different question got sparked here. As a reporter covering the defense industry, we see these sort of thousands and thousands of guys who are creating these requirements, these military requirements that they need for a certain system. And that gets vetted through all kinds of arcane processes. And then only later on do they try to figure out, well, hold on a second, do we have the money for this? How much will it cost? And how much are we going to spend on it? Is that in any way how you guys look at this? Like, do you guys look at requirements and threats and stuff like that? Or is it purely a, what's the profit margin?
I think that's a big factor. When we look at a business from, a client of ours that's likely to be acquired by, a larger company, whether it's a mid-tier services company or a large platform-based prime contractor, it's about the longevity and the sustainability and the growth prospects of that business that are actually driving them to make that investment in the first place. And so it's a very important part of the puzzle, and it's one that gets harder and harder to measure as you get less and less defined from a program standpoint, right? If we're supporting a program like the MRAP, we kind of know where that's heading, or ultimately what the framework for that is. But if we're doing something like cybersecurity, it's a much more difficult challenge to put your finger on the budget dollars that are going to flow in that direction, and who's going to take control of that, and how the deployment's going to get handled, and whether we're going to buy it up front or take it in a managed service type of environment over a longer term. I mean, all of those things are fundamental drivers of the value proposition for either an investor going in or the shareholders of a company when they're looking to exit. And it's a very critical part of that equation when you're dealing with it in the DoD context, or in the government context in general, because you have that information out there. It's for public record as to where a lot of this is going to go.
I think one of the other contributors to the underlying valuation, particularly when one's looking at the new opportunities and relating these similar tasks, is you think of those similar tasks and how they support the underlying operating concept for that organization. The part that really defines that organization. What does a service do in the land domain or the maritime domain or the air domain? So one thinks about, let's look at UUVs, for example. I live in Boston. It's a great cluster for undersea activity. You have the Navy that needs to figure out how to understand space, this Space Force thing with decreasing amounts of ships out there. And so they would have one means for using an autonomous undersea vehicle, whereas special operations would have to access places, and they would have an entirely different use for the same task for that same vehicle. And simultaneously, with respect to dual use into the civilian world, it goes beyond critical infrastructure. You think about exploring the undersea for commercial uses. I think during the oil problems in the Gulf, enormous numbers of undersea autonomous vehicles were used for the cleanup part by actually a company out of Boston. So, the value proposition has to be thought of in terms of how it supports, in the defense contracting business at least, the user, the end user who's actually going to submit that requirement.
I think there's a problem sometimes between what we think the need will be and what it actually ends up being. A good example is the F-22. It's a $65 billion, the most elite aircraft the world has ever seen, and it hasn't been used, right? And in Afghanistan, we're using World War II era blimps which have been essentially the same technology from half a century ago and are being used for perimeter security and ISR. So the idea that a $100 million aircraft is sitting there not contributing to the fight, but a couple $1,000 blimp that could be flying over a car dealership back home is actually a critical piece of the defense posture in Afghanistan.
But doesn't that make from your guys' point of view, doesn't that kind of totally screw things up? Because the money, it would seem to me, is all in the gazillion-dollar fighter jet, not in the cheap blimp. So what do you do? Do you chase the money or do you chase the requirement?
It's not that counterintuitive if you think it through. The cash cow for almost every company is the program that's been around, and the innovation and the investment requirement has subsided because they've got a platform that everybody likes and it works and it goes, and you're really just managing obsolescence at that point in time. The cost of that is significantly different than being on the front end of an F-22 or a JSF, and so the margin difference is dramatic. So if I'm a larger organization on one of these larger platforms, I actually don't mind that these things are going to go off and continue down the path, and it creates a whole other market of folks that are out there supporting and servicing those things based on qualifications and credentials that have been in place for a long time. So it actually makes a more efficient system. It's not necessarily the best from a customer standpoint or the best from a taxpayer standpoint, but when you look at the profitability of a lot of that stuff, it's not hard to believe that actually goes on.
Are the big defense contractors still able to be innovative? Or if all their money is being made managing obsolescence, as you just said, is there incentive not to be terribly innovative and just keep on going on?
Yeah, I think there is. I mean, you don't want to end up in a situation where you've been you're totally cannibalizing your existing programs, but you also don't want to end up in a situation where somebody else is doing it. And so, what we see is the acquisition programs. A lot of the larger organizations are designed to either advance their technological capability or enhance their position with a customer or a entity that they just can't get access to. So they end up, kind of doing things to help stave off that kind of competition over the longer term.
We talked about earlier. We talked about Northrop getting rid of its shipbuilding business, which, if you think about it, is kind of like an amazing thing, considering there's, they're one of the few big shipbuilders left. Do you have a sense of why they did that and why other big defense contractors are getting rid of sort of what was seen as their core businesses? Anybody want to take it?
I think it's growth. We know kind of where the Navy's heading. We know how hard it is to build ships in this day and age. If you want to be considered a growth stock in the public markets, having that type of business is a pretty bad pun, but it's an anchor. I mean, it is a very difficult business to be perceived as a growth business, given the macro trends and the budget environment around that. So it's not, again, it's if you're going to reshape your business and try to be viewed as a technology savvy kind of partner of the future for your customers and ultimately for the shareholders and investors that are looking at you, I think that's absolutely, you have to prune the portfolio. And this is not the first time we've seen this. I mean, this happens every 10 years or so. It's a continuous cycle of trying to balance out the right customers and the right capabilities and to be positioned for what is in favor today. The challenge is that's changing more and more quickly in today's day and age than it was 30, 40 years ago.
Mike, what's a deal that you wish you would, what's a deal that you've seen recently that you wish you had been on? Or what's a deal that you've seen that's been particularly impressive?
What's a deal that I think is particularly impressive? I think some of the social media deals I think are particularly interesting from an intelligence standpoint, and because that has created a tremendous business, we think, to invest in, because what's happening is we're drowning in a sea of data. Literally drowning in a sea of data. And so we are investing in businesses that will reach into into the social media and extract the information that we need. And you can define what the need is. It could be on the commercial side, it could be on the government side, but the ability to be able to do that quickly and in real time is, I think tremendously important. So I think the social media transactions, and the ability to be able to extract the data from that really is terribly critical to our national defense and to our intelligence and security apparatus. But there's another point to be made here. We're going to have to kind of begin to shed some of the traditional concepts of defense companies when we take a look at the threats that are in front of us, because we do have platforms, we have obsolescence, we have, for example, defenses that we put in place to meet threats, and those defenses have been there for 5, 10, 15, 25 years. But cyber changes that. And why does that do that? Cyber changes that because of the velocity of change that takes place. Every single minute of the day, about the time you find a defense, somebody finds a new threat. And so we're going to have to take a look at the ability to be able to make investments into the future and to be able to have a force structure, if you will, a SWAT team, if you will, and I know these things are being worked on, that can instantaneously work on new threats as they develop, and cyber presents the United States with those new threats. And the velocity of change is just awesome. It's incredibly fast, and that's velocity of threats. So as we look at these platforms and we look at where defense is going, you suddenly see where the new threats are coming from. And if you accept the concept that cyber presents new threats to the critical infrastructure of the country, then I think you have to be prepared to be able to move quickly and fast, because obsolescence won't be measured in decades, it'll be measured in minutes.
And you're saying that basically that you've got to be more than a defense contractor if you're going to move that fast?
I believe so, and I think that's why you see a shedding of some of the more traditional businesses that the large defense contractors have had, because I think they are getting themselves lean and mean, and I think they are getting ready to take a look at the 5-year plan that Secretary Panetta put out, which essentially pushed aside a lot of the large platform systems out there and has suggested lean, mean, fast, quick cyber.
Got it. So that, in other words, you almost have to get rid of your shipbuilding if you're going to become a cybersecurity company.
I would say to meet the new threats wherever they are, you have to be smart enough to say, okay, what works, what doesn't work, and selling large weapon systems is going to become, I think, obsolete over time.
Got it.
I'll just to round out that point, I would add, to the question of R&D, M&A actually becomes sort of a substitute for R&D.
Merger and acquisition.
Yeah. Because R&D is a cost line for a public company that's managing to quarterly earnings expectations. For a small or medium-sized business that has developed the next aggressive cyber offensive or cyber defensive product, it makes more sense to buy that than to try and develop it in-house.
Got it. I'm going to open it up to questions in just a second, but I want to ask real quick about the overseas market. Do you see it sort of behaving the same way as the U.S. defense market? Are you guys, positioning your companies to sell more overseas, or are you guys staying, mostly American?
We've looked at some interesting businesses that already have that exposure, that have exposure to the Mideast, to Turkey, to India. The ones that are looking to grow into those markets, we tend to be a little bit more cautious about, just because we know that's very hard to do.
Got it. So you can't just wish it. You got to already be doing it.
Yeah, if you think it's hard selling a fighter jet to the U.S. government, try selling it to India.
Right. Okay, let's open it up to questions. There in the black shirt.
Mark Chiness from the Naval War College. I have a question. You touched on it a little bit, but I want to be more precise about it. The dual purpose of the defense industry is to make a profit and then enhance U.S. national security. This worked well during the Cold War when we focused on advanced equipment and high-tech solutions and platforms. Today, the threat is largely asymmetric. And you use the example of MRAPs, or up-armored vehicles. It costs about the same price of an iPhone to construct an IED, about $200, $250. And yet an MRAP costs $500,000. This seems to be playing into the strategy of terrorist organizations and other non-state actors that want to increase the costs of war to eventually weaken the will of the United States to continue in the conflict. is the defense industry truly serving 21st century goals of American foreign policy by continuing to focus on high-tech solutions to a low-tech threat?
That's a great question. And I would argue that, yes, the defense industry still has the right perspective, has the best interests of our national security. I mean, there's no doubt about that. I mean, I sit in conference rooms with folks at all of these companies on a regular basis, and you're continually impressed by their desire and focus on doing the right things, on putting the warfighter in a position to be successful and putting the citizen in a position to be safe. But it's not something that is black and white. I mean, this is, as you characterized it, an asymmetric environment, and you need certain shows of force and certain things to carry around the the capability in a very public and very visible manner. But there's a lot of things that are happening that you don't read about in the paper, that you don't see in an earnings report, that these folks are doing, that are on the ground all over the world, solving problems and putting us in a position where, as Commissioner Kelly said earlier, we've only had 14 kind of visible attempts of a terrorist attack on New York City over the last, I think it was 10 years. I mean, there's been thousands upon thousands of those thwarted by the cooperation between the contractors and their brethren in the government. And so I think that tends to get lost in this. But this is a slow-moving industry. I mean, the reality is it takes a long time to affect change. We're still going to be dealing with the fallout from Iraq and Afghanistan from a contractor standpoint 30, 40 years from now. There's no doubt about it that it's going to take that long to transition the industry to be as nimble as it needs to be to deal with that low price threat.
But it can adapt quickly, actually. I mean, the MRAP was a huge success. Mm-hmm. It undoubtedly saved lives. And when the method of detonation went from RF to IR, they actually changed, the jammers on the MRAP. So we'll never be as quick as, those asymmetric, threats. But their industry actually is quicker than you would think in terms of adjusting to solve them.
Sorry, go ahead.
I would like to just follow up on that question, if that's all right. If not, I'll come back to it.
Go ahead.
I question the premise. If the premise is we're just dealing with low-tech threat in this complex environment, I think that's partially true. The other part of the truth is, and General Hayden referred to this when he was talking earlier about, what had happened within the NSA. If you think about the fundamental shift of finding people as they move, and you think about, once again, I'm in Boston, and you think about acoustics. Okay, if you think about this high technology that was used to find other naval assets, let's say, that would pose a threat to us, well, that same technology has a real hard time working when you're trying to identify and distinguish between different types of platforms and fuse that with some semblance of all-source intelligence to find who that person is in what particular platform, let alone taking your sensor and pointing it upward as opposed to outward, and then approach the shore. Those are really complex, those are really difficult, I would maybe even complex problems that you have to do with physics to be able to use that technology to assist a decreasing force, to find these individuals. And then all of a sudden, the individual moves from place to place in a bonka boat. Okay? How are you going to find that?
So sometimes there's solutions. There's sometimes low-tech threats, and then sometimes there's stuff that may seem low-tech, but it actually requires a real high-tech response.
If you're going back to the notion of the challenge of keeping track of what's going on across space and using technology to replace people, that's not always easy. And then there's the normative issue to it behind it. I mean, writing a letter to a parent of a soldier just is a miserable experience.
Yeah. Let's get more questions over there.
Mike Kelly from Task. I'd like to press you on your calculus a little bit. The budgets are going down, and I've heard people say that we're probably maybe 30 to, I've heard people say even 50% oversubscribed in the national security industry. So, Devin, in one case, you're taking a risk and jumping into that market. Mr. Steed, on the other hand, is saying, hey, alternate energy and cybersecurity are needed more than just by national security. But my question about the calculus is, do you see companies going out of business at a greater rate over the next few years? And can you say that they're going to be large, medium, or small?
I would say that yes, we will see more companies over the next couple of years in the small category that are going out of business or just kind of just floundering out there, right? I mean, this is a budget environment and a competitive environment that is making it very difficult for them, with the exception of the small business rules that kind of keep them around there. So, if you think about it from a $10 to $20 million standpoint, you could sort of see them being protected by the ability to compete for small business set-aside contracts in the government environment. If you get to be $30, $40 million, that's when it becomes incredibly difficult to be competitive because you don't have the benefits of some of those programs. So I think from my standpoint, yes, we could see more of those going out of business in a market where we traditionally don't see those kind of things happen. And ultimately that's going to be kind of how I would look at it is sort of this 80-20 split, right? There's 80% of the companies are chasing 20% of the market. There's a very insignificant portion of the budget that has growth potential and the ability for people to kind of penetrate that market, and everybody is flocking in that direction, and there have to be more losers as a result of that than what we've seen over the last 10 years.
And just to put a point on it, so that 20% is cybersecurity, it's SOCOM, as we talked about. What else falls in that 20%?
I think health and health IT falls into that category, both in the commercial and the federal context. Ultimately, I think unmanned systems falls into that category. And I'd argue that kind of whether you characterize it as big data or not, folks that are capable of facilitating the intelligence apparatus, whether it be state and local, federal, defense, intel, kind of community, I think that's a huge part of this, is being able to facilitate the mission.
Drones, malware, spec ops.
All that. Yep.
And nurses.
Yeah.
And you see it
that can do IT.
Yeah. I think it's more of an issue for the big guys, actually. And you can see that in the market, right? The primes are trading at 5.5, 6 times, and companies that are in these
5.5, 6 times price to earnings.
EBITDA, cash flow. And the companies that are seen as leaders and innovators in these sub-segments are still being acquired at 10, 11, 12 times. So I do think there's an opportunity. I think the challenge more for the smaller guys will actually be more of a financing issue.
In the back.
Hi, David Olive. As you're looking at companies in the Homeland security space, to what extent does a company's Safety Act coverage, which is a liability protection scheme that the Homeland Security Act offers, play into your evaluation as to whether you're going to invest or help somebody buy a company?
Well, we will do some due diligence on that, but it hasn't driven our decisions as to whether to finance a company or not. But we do look at it as a point of due diligence as we go in to see what that risk would be and how that risk would act, one way or another on some of the things that we're looking at, especially when you get away from cyber, by the way.
And some of the things that affect that are, whether or not your employees are carrying around firearms or something along that line. Whether or not your employees are downrange, in support of an agency or a warfighter, there's certain things from a more kind of practical standpoint that affect it more so than kind of the act that you were characterizing.
Roger London. One of the biggest challenges for the smaller innovative companies is their intended customers don't know the value of their technology because they don't know each other. Do you guys have any programs that you use to help your portfolio or other companies get those introductions and get visible to the customers?
Well, we do that regularly. That's part of the That's part of what we as venture capitalists, growth equity investors bring to the table. So we have a team of value add folks that have come out of, some have come out of the agency, some have come out of the commercial sectors, that sit with the CEOs of the companies before we finance them, put together a value add plan, and out of that value add plan, we'll go ahead and make the important introductions. Many times it'll be that referenceable introduction that will then drive, inside of the government, by the way, that will then drive profits on the commercial side. So one of the ways that you distinguish yourselves in this business, in my opinion, is to be able to offer that as part of your investing. Too many people in the past, too many people who've been just regular, venture capitalists in the past, have put money in and they claim to add value by just monitoring the company. But we put those plans into place in advance to find those customers, find the right path to profitability, and that's worked very well for us over the last 10 years. That's the way to do it. That's the right way to have smart people at the table investing with you.
Mike Garrett, as you look at how DoD is evolving from cost-plus contracts to more commercial fixed-price contracts, how do you evaluate that when you look at acquisitions for companies?
I would say that it is a meaningful issue for any investor to focus on, because if I look at understanding the technical differences between a cost plus contract and a fixed price contract, obviously it's different. But the reality is that the management capability and the infrastructure required to effectively operate on a fixed price contract is dramatically different. And so as that risk goes more and more to the contractor to stay on time, under budget, especially in an environment where the customer has become, at least from my vantage point, more willing to change their requirements or change their expectations of what goes in there, and the change order is not necessarily on the heels of that in all instances. Fixed price contracts are a more risky dynamic. The flip side of that is that we see companies that can actually perform on those contracts exceptionally well and can drive margins that are well above what any of the public companies in the industry are trading for. And the kind of cat and mouse game ends up being, big company looks to buy a company, small company X with higher margins, and says, well, we can't sustain that inside of our organization. So it's a complex issue, but it certainly is a higher risk profile relative to a kind of cost plus type of environment that has been the way of the past.
Other questions?
What kind of reps and warranties do you get from people you're investing in with respect to ongoing past cyber intrusions, and how does the discovery of an intrusion affect the negotiation over price or other aspects of the deal?
Devin?
I haven't seen anybody really focus on that issue in the context of legal terms and conditions for some of the more mature type of companies that we're working with. However, the diligence that's being done on that front is much more substantial than it was even 24 months ago. And I think the unfortunate reality is that the more work you do, the more you're going to learn that you don't like. And so there's this desire to sort of just keep on trucking through some of those issues.
But if a company is getting owned all the time, if a company is getting its networks penetrated, that has got to affect what you're willing to put into the company, right?
Well, yeah, because it's going to be additional cost for you to manage that on the back end, or it's going to be exposure of your IP and other information in the marketplace. I thought it was interesting. I'm sure many people here followed it. Mantech acquired HB Gary earlier this year, and if you followed the cyber news at all, that was obviously a big name there for a while, given their role in some pretty prominent acts around the world.
Because HB Gary had most of its information exposed by Anonymous.
That's right, and it was still a very valuable asset to to a company like Mantech because of the capability and technology that they brought to the table.
But do you think it would have sold for the same had tens of thousands of their emails not been published online?
I don't know the answer to that. I don't know.
Yeah.
So to your point, in the later stage companies that we invest in, we have a whole regimen of reps and warranties around cybersecurity. Some of the greatest part of the assets that you invest in are IP, and if it's been stolen, the value of that company is quite a bit less than if it hasn't been stolen. So in the later stage companies, in the earlier stage companies, they've had very little activity, but in the later stage companies, we do require that because that is a point of value that we take a look at in trying to determine if if the IP has been compromised in any way, shape, or form, and that becomes particularly important. It also becomes particularly important when you go back to a question I think, Noah, that you had earlier, which was about the international aspects of what we're doing. Critical infrastructure knows no geographical boundaries. The United States relies on up to 25% of its energy comes from Canada, for example. And so we will look at these companies in the reps and warranties way, or even in a broader context, as being able to invest in state, local, national, regional, and international. And so when we go in and look at these companies, we look at them at inception and take a look at those technologies so that they'll be readily transferable into the international context, so that we can take at the beginning of the investment rather than the middle or the end of the investment, we'll take off the table any of the issues around moving these technologies abroad. And we spend a lot of time looking at that point, and we'll put reps and warranties into deals around that area as well.
Over here.
Andrea Dew, the Center on Irregular Warfare and Armed Groups. Gentlemen, given your very different backgrounds and your very different perspectives on these issues, I have a question for you which I hope is an optimistic end to the discussion. If you were a small business owner right now, given that much of the innovation lies with the small business owners, the ability to produce something that's niche, a very specialized capability, what advice would you give to a small business owner going into this field, perhaps somebody coming out of the Department of Defense, looking at this and saying, I have this particular expertise, I have a small business, where are the opportunities? What 2 lines of advice, where would you point them towards and say, this is where you should be looking, these are where your opportunities are?
Well, I would say, first, definitely build the infrastructure, the controls, the operations for where you want to be. So, we see a lot of companies that are run like small businesses, and that becomes an impediment as they're looking to grow. Secondly, I would say, in terms of your partners, you want to have, whether it's your lenders or your equity partners, you want to have folks who understand the space, know this is an industry that particularly now is going to be choppy waters, and has a long-term perspective so they can really grow with you.
I would
go ahead, please.
I would just say understand the demand side and go to understand what the services and SOCOM or whatever agency you're looking at, but there's a couple of them that are really good that are different about something small. It tends to be SOCOM.
And what I would add to that is as a small business getting started especially, don't be afraid to do business with the government. You'd be surprised the number of small businesses that come into Paladin that are afraid of the government. They want to try to figure out how to do business with the government. We see it all the time, and one of the attractiveness in coming to Paladin is that we help them with that, getting over that issue. Secondly, don't be afraid to work in the international realm. And I go back 20 years when I tried to get the XM Bank, to give me a loan on a particular business that I wanted to do abroad back in those days, and there was nothing to help you. If you were a small business, you got blown away because XM Bank only did the big deals. And so I would say be innovative. Don't hesitate to be creative. Don't be intimidated by the government, and think international.
Got time for one last question? Okay, then I'll take moderator's prerogative and sort of ask more of a left field. Well, I guess 2 left field questions. Number one, just going back to our first question, is there a tension between the profit motive and actually filling a defense need? because we do hear about billion-dollar solutions to $25 threats. And so is there a tension, and how do you manage that tension between sort of profit and security?
It's just a part of doing business. I mean, any of these, we think about this all the time in the entrepreneur context, right? I mean, if there's not reward at the end of this, why take the risk? Why go through this? And ultimately, the reward is obviously being a part of the national security framework, or doing good things for your country. But there's also the risk that you're taking in putting this business together and building it and putting it in a position to be able to service your customers. So I don't think there is. I think some of the rhetoric that you'll see from either this administration or others claim that contractors are fleecing the system. I think it's like any other business where there's 99.9% of them are good actors, and there's folks out there that are going to take advantage of the system. But that's just the cost of doing business, in my mind, in any industry.
I'm not in the defense industry per se. I'm once removed within the hedge fund platform that we have. But thinking about that platform and selling to the government, there's a couple of reasons why one would that we're grappling with doing something. But part of it is understanding, building a relationship, and understanding bargaining power. The government's pretty big, and they've got some bargaining power. So when you start thinking through why you're doing something, you may have to think of it in several stages as well, and that helps adjust your tension point there.
I think there's two answers to it. First of all, capitalism is one of the greatest economic engines in history. But the second piece to it is there's absolutely nothing wrong with making great profits and doing something good for the country. And no one should be ashamed of that. And everybody should step up and try to do something good for the country and make great profits at the same time. And that can be done. That also becomes the engine for innovation. That people can go to the government, people can go to the commercial sector and come up with new ideas and new thoughts, get them funded, make some money, and again, do something good for the country.
All right, so let me try the question a little bit differently, which is what moral lines do you set when you're investing? Is it you don't want to invest in a company that's also doing business with, a U.S. Adversary? Is it, what is it? Because ultimately you are, investing in the weapons or weapons assistance space in some way, and so there's got to be some sort of, moral code that you use. What is it, and how do you apply it?
I don't. Personally, I can't speak to that, but I can tell you, in dealing with investors in this space, there's really two ways they do it. It's kind of you have these funds out there that won't invest in anything that has to do with the tobacco industry, and they kind of draw a line based on personal beliefs in a lot of ways and sell that to their LPs, and that's fine. The other is headline risk, and what we hear from a lot of investors is they don't want their company to end up on the front page of the newspaper, or with you writing an expose on them, right? I mean, that's a big issue. Whether that means it's somebody that's downrange and support of the warfighter, or that's somebody that's committing fraud and paying off a contracting officer. It's that risk generally that they're trying to manage as much as they can.
Yeah, Mike, you want to?
So we take great care when we go outside of the country, in particular, to adhere to the rules that are there, but to go a little bit further. So the Patriot Act, some of those areas. We look at the terrorism databases. We go through that. We certainly won't move any of our companies or their products and services into the enemies of the United States. And in some instances, if we don't know, we'll consult with the government to see exactly where certain things are going. We're also taking great care to make sure that on the front end of the investment, we can't necessarily control the back end of the investment, but on the front end of the investment, that we're not going in and trampling on privacy and the rights of others. Sometimes when it gets in the hands of the government, then they'll make other decisions as to where the bright line is. But we're very careful to look at those kinds of things. and try to make good decisions around it. Again, it's part of our investment process.
Got it. Okay, with that, we've got to wrap it up. Let's give our panel a big hand.